So, quick recap on how things went for the day. We'll go ahead and look at our favorite tickers. So, Mullen sold off a little bit. We had a pretty bad gap down this week. Um, the um, the open of the open today saw us retrace from $3 all the way back down to 230 at the at around midday. The We've since consolidated and we've based around this support at $2.30, which is not bad. $2.30, 240 is about what I expected as the lowest low. If we end up breaking down below this level though, like 220 would be a clear breakout on high volume, then I would say that that's it for Mullen. Um, that would be a clear downtrend and breakdown. But Mullen likes to move on Monday, so I'm taking the risk. I have I have averaged down on my position since taking profits near the top, and I've got a little bit more capital in Mullen that I decided to just throw on top just to in case this thing makes a nice rebound. There's a lot of short interest on this thing right now, but it is fully utilized. So there is if there gets to be another surge of volume, if people are willing to take risks, the market makers are still over leveraged on this. They are still piling on short exempts on this thing, and they are borrowing shares like crazy, looking everywhere they possibly can to borrow shares in order to keep kicking the can down the road, and they are digging themselves into a deeper hole every time they do it. The only way that they get out of this now is if Mullen goes back down below a dollar where they can cover without just to get neutral. Just to get neutral, they would need to go all the way back down to a dollar. That's what they would have to have happen. So at the moment, Mullen is still looking strong. It's still following these higher lows patterns. So I'm gonna go ahead and reset these. This is the new breakdown support. Um, so if it breaks below the $2 level, like that's probably it. It's going back down to a buck 60. Um, but Mullen has plenty of supports there and even further below. So if you're just looking to avoid getting washed out of your trade, then another thing that you can do just as an option for a hedge, and I did this, I bought some puts that were just really, really cheap. And if for whatever reason my calls end up bleeding out, then the puts will save me and they were really cheap. So if those burn, then I'm not worried about it. If the puts go worthless, then that's fine. That's a sacrificial, $100 or whatever in order to protect hundreds more, you know? So that guarantees me at least salvaging the position and that I don't get totally washed out of the trade and I won't completely lose out on all the profits that I made on the run up. This is something that I learned how to do when when I took my lumps on SPRT. So it's good to take lessons from all those events. Even if you have a really like killer run up and like you trade it perfectly, and then all of a sudden you make just the wrong decision and you stay in a little too long without hedging your bet, you can end up regretting it really deeply. So it's always a good idea to take some money off the table. And if you're still going to stay in the stock, if you're still going to leave some skin in the game, then it's always a good idea to leave yourself a little bit of protection. You're not hurting your chances by taking a little hedge. If you take some money off the table and then buy yourself a protective hedge against volatility, just with like as soon as you see these big run-ups like this, it's okay to buy some puts and just to protect yourself and protect your capital. It's worth taking these lessons every single time that you experience them. But anyway, just to wrap up my thoughts on Mullen, this is big support here where it's currently at, just based off of this volume shelf. So if the price starts to if we see the price lift back over here, then we're going to be back in that zone of strength, and we'll see another rebound. Hopefully, if we get above $3 again, we'll get another surge, and the stock can keep running. But we'll just be patient and try to keep your expectations in check. Let's be realistic. we are fighting a big entity. We are fighting market makers. So always remember that. Let's go ahead and take a look at AMC and GME. AMC closed the day at 2024. It's now currently up another 20 cents in post market. Sorry, like 15 cents in post market. um, I'm seeing a very nice bullish pennant on the daily chart here. I'm sure you'd see it even more clearly if you looked at it on the 2-hour chart. But in any case, that's no big deal to me. I've got a vertical call spread from 20 to 30 on AMC. That's just because I don't expect it to just squeeze out of nowhere. I expect it to hit a ceiling at some point, meet resistance around $30. That's based off of these previous highs here. Um, so what you're seeing right here are resistances and when it sold off last. So as soon as I see AMC hit $30, that's going to be my signal to close out that trade, get out of those vertical call spreads, and I'm going to wait. I'm going to be patient. I'm going to wait for resistance, and I'm going to wait for it to take a dip, and then I will go ahead and add back into my position. GameStop, I'm probably going to stay out of it. I'll just be perfectly honest with you. I don't really like to trade GameStop because the options are just way too expensive. I don't like to, but I see huge bullish upside for this one. If you are in this for the MOAS, if you've got a lot of shares and you're still averaging down all the time, great. That's fantastic. You know, do you. Um, right now, I see a inverted head and shoulders pattern on the 30-minute chart, and I see it getting ready to break out on a bull wedge here. So if you see a breakout above 160, I'd expect you to meet resistance at 180. 180 has been a historically huge area of resistance for GameStop multiple times, going all the way back to last year and even during the original squeeze in January 2021. So just be aware of that. Couple of other plays. Oh yeah, Progenity. Big play for Progenity. Progenity likes to move early morning on Mondays, so I'm expecting big things from Progenity. It tested 108. I'm sorry, it tested $1.80. Um, that's a huge area of resistance. So the fact that it has now touched it for the second time, just in the past month, is very bullish for me. I'm expecting it to continue to consolidate and maybe make a run to try to break out of that zone. I expect Progenity to meet resistance at 240 to 250. Oh, by the way, earnings is on Monday. I believe it's happening in the evening, if I'm not mistaken. It has a float of 147.5 million shares on the float. There's a roughly 150 million outstanding shares for Progenity. It's quite it's a mid cap stock. Or oh, I'm sorry, no, it's technically small cap, but anyway, um, if this thing does get moving, Progenity has some pretty huge upside ahead of it. It's got a lot of good things going for it. We're looking specifically for data for the pre-occludia or the preeclampsia preclinical trials testing results. That data is very significant. That's going to be a huge announcement and a big bullish catalyst for Progenity. If they announce that during earnings, expect it to run. It's like it is already in the works. They have the data. We know that they have the data. We're just waiting on them to announce it. They did release a patent from the U.S. Patent and Trademarks Office as well, which is linked to Precludia. That was issued a couple of weeks ago now. So that information is we're expecting that to be included as well. So this is a big earnings call. I would expect them to announce it here. They are obligated to announce this very soon. They should have announced it earlier. They're basically running it up to the deadline. So I don't think that they're doing that by accident. I'm pretty sure that they were just giving themselves an opportunity to buy shares because they have to wait until after earnings in order to buy the shares. So anyway, right. So I think that'll do it for Progenity. Expect there to be some pretty significant volatility on Monday. If it makes a big move, then well, congratulations. BBIG, It is continuing to test these support levels, and it's still holding strong, very solid support at the 285 level and above. It keeps bouncing around in here, so this consolidation, I would expect lower highs, higher lows, continuing on into April. Um, and there's a lot of calls that are expiring for BBIG April 14th. So I'm probably going to say if I take a position, it's going to be out till May. I'm not going to take another position for April. There's a lot of gamma potential for April, but I'm not going to buy calls for that because that's a good way to disappoint yourself by having a whole bunch of your options expire worthless. That being said, I'm already out of my April calls. I don't have a position in BBIG at the moment. I am looking to get into one after this consolidation runs and I let the theta eat away at some of those call options. That's just the way that I'm choosing to trade it. I am bullish on BBIG. I just don't have a position right now.